My next guest expects those shares to climb above £26 and has Shell as his top industry pick. So do the latest earnings justify that faith? Well, Peter Hutton is energy equity analyst at RBC Capital Markets, and he joins me now. Thank you so much for joining us. In terms of what we're actually seeing, Shell is your top pick, especially after, I guess, those disappointing results from BP.
That's right. I mean, they were our top pick before that. The reason for that is Shell is in a 2-year delivery window where it's got good operating momentum. It's gone from declining in terms of production to growing, and that growth is on volumes which are generating cash margins which are in some cases twice the average that it's getting on the rest of its business. So good growth, good cash flows.
Peter, it's going to be much more difficult though for Shell, I guess, to manage the volatility in the oil price, because we're nowhere near understanding what the oil market is going to do over the next year and a half.
Well, I don't think we're any further away than we ever have been, to be honest. These are always volatile times, and I think the interesting thing about Shell is that they are 50% gas in terms of their production volume, so they've got some hedge there, but actually we quite like their exposure to the oil price. And while a lot of the growth is coming on as physical volumes of gas, actually it's trading relating to the oil price, either because it's as LNG, so that's on a contract linked to Brent in Asia, or it's as gas to liquids in Qatar, which is starting up right now and will take through until about the middle of next year before that's fully on stream.
Yeah, they've expanded in Qatar and also Canada. Do you expect them to go into other countries? Is it now more difficult for a lot of these oil majors to negotiate with national oil companies, or is there still scope to grow?
Oh, I think there is still scope to grow. I think in terms of access, we would see Shell as competitively advantaged. It's a global, it's got a stronger reputation, it's delivering on technology. Right now we expect with GTL, it's moving into floating LNG. That will start in Australia. We're still some time away, but that's mobile technology, not only in the assets themselves, but the technology can be taken into other places as well. So we think actually, in terms of the growth, it's replicable, and we see their ability to continue to develop that strategy, really underpinned by pretty much a world-leading position in LNG, which is very strong at the moment.
And you have complete faith in management. Mr. Vosser is the right man for the job, and he will...
I would say so. I would say the company like this, yes, he is. He's a very strong CEO. They've got a good management team, but it's a good throughout the company. And a company of this size, you're looking for management strength in depth, and I think that's something which Shell has been able to demonstrate more effectively recently, although you'd have to say slightly easier comps than it is used to in the past.
Any more acquisitions, big acquisitions that you see on the radar for Shell that may actually go well or may actually go wrong? So something that we have to watch out for.
Yeah, I think people are concerned. I mean, the issue about cash is what you do with it.
Yeah.
And there is a concern amongst investors that the opportunities aren't as good as what they've got now. Now, some will be, some aren't. Floating LNG, for example, we've got making about a 13% IRR, which is good and in line with their average. So I think their ability to recycle is quite good. What we would like to see is a little bit more share buybacks, not aggressively, but so they're buying back the shares that they're delivering through to their shareholders as scrip. There shouldn't be any real excuse to letting the shares outstanding creep up at the moment and dilute the dividend. So you want a bit of that.
Peter, in 10 seconds, your price target 26.60, and that is because you're expecting some share buybacks, or regardless?
No. I think it's on the strength of the cash flows and the return to shareholders from those cash flows over time.
All right, Peter, thanks so much. Peter Hutton there. Now,